Hey, here we are again for Accounting and Accountability.
Yes.
Another podcast, Tammy.
Right, another one.
I'm Brian Statina, Director of Tax Services here at Fallcastle.
I'm Tammy Ordway, Director of Entrepreneurial Services.
Guess what?
I know.
We got some stuff to talk about.
We do.
Yeah.
I tell you, and I know it's probably getting a little bit old that I say this all the time, but just about the time I think we might have nothing, we've got something.
Yeah, you know what? It keeps us busy. It keeps us on our toes, and we can keep in front of you. So,
yes.
You know, it's the end of the year.
Mm-hmm.
We're getting close. I can't believe Thanksgiving is coming. So
It's next week.
Oh, my goodness.
I am so excited, though.
Yeah.
I love Thanksgiving.
Wow. So Tammy has a couple little tax planning tips for you.
Well, so this time of year, we would, and we are, in the throes of tax planning.
Absolutely.
But some years are a little bit more stressful than others.
Sure.
And when I say stressful in a good way, because we love to get in front of our clients. Now, here's the good part of it, is that it's unlikely that we are going to be looking at tax increases.
Yeah, that's what they're saying.
Now, I do have to say, and I say unlikely, but there are some of you and some of you that make over $10 million.
Yeah.
So if your AGI, which is adjusted gross income, is over 10 million, oh, yeah, you could be looking at some more taxes.
I'm sorry, Tammy.
Yeah.
I'm sorry. Yeah.
Hey, if I make over 10 million, I will gladly take on
pay a little more tax.
To pay a little more tax.
Yeah.
But so now we're going to go back to some of our classic advice that we've given clients over the years. And if you itemize, and not everybody itemizes now because the standard deduction is so high.
Mm-hmm.
It's like what, over 24
it's like 24 and 850 this year.
Right.
I think. Yeah.
For married filing joint. So we're going to go back to, if you itemize, accelerate some of those itemized deductions. And here's a couple that you can do. Pay your last mortgage payment in December rather than, waiting until December 31st and maybe it doesn't get to the mortgage company until January. That way you are accelerating that interest deduction. Mm-hmm. Charitable giving. So although you can take an above the line now, so single is 300, 600 for married filing joint. Mm-hmm. But let's say you give to the charity maybe $5,000 this year, $5,000 next year. We'll consider in that same year you're going to make that extra mortgage, payment or that early mortgage payment. Consider making both years charitable contributions. Maybe take your 2022 giving and combine it with your 2021 giving.
Stack them because you're not getting the benefit of it. You're going to give them the money anyway, right?
Right.
So maybe stack it in 1 year versus spreading it out over 2 or 3.
Exactly. And then one strategy that we love and we mention often is when you are over 72 now and you're required to take an RMD, required minimum distribution out of your IRA, consider having that directly contributed. Now, that is very important, and I'm exaggerating on purpose. You can't get your RMD and then write the check to the charity,
right.
Although you can. But the better strategy is to have your IRA holder directly give it to the charity, and that way you don't pay taxes on that at all.
Right,
so that's a strategy even above itemizing.
Yeah.
Not everybody can take advantage of that though, because not everybody's over 72.
And somebody might say, well, if I take the $100,000 and turn around and give it to them, I'm getting the $100,000 in income, $100,000 in donation. But it's not apples to apples because it also can be raising your AGI and cause you to fall into other buckets or phase outs.
Exactly.
So it's good to just transfer. You don't get to pick up the income. You don't take the deduction, but it's not adding to your adjusted gross income.
Exactly. And this didn't always affect everyone, but you do have AGI limits on your charitable giving.
Right.
Used to be 50%. Now it's 60%. But keep in mind, stocks are still limited to 30% of your AGI.
Yeah.
So
for 2021, it's 100% for cash donations.
Yes.
It was because of the CARES Act and such that came out. They were saying we'll give people advantage to give more.
Right, exactly. So before you're about to give a really large contribution, just step back and take a look at that and make sure, one, you're not going to be limited, and then see if you could possibly do it through your RMD or stack it.
Yeah, and also if you have a lot of stocks that have high appreciation on them, meaning they're very valuable for what you paid for them, you can just gift the stock to a lot of charitable organizations. Right. And when you do that, you don't have to record it as a sale of stock, but you get the full fair market value as a deduction.
Right. So that's a win.
I always tell clients, don't cash out stock to give it to charity.
Exactly.
Just give them the stock.
Give them the stock.
They'll sell the stock.
Absolutely. Yeah. So that's a lot.
That's a lot, Tammy. Thanks.
Yeah. What do you want to add to that?
Well, estimated tax payments.
Yeah. Okay.
Gotta make. Let's say you might want to adjust your estimated tax payments or adjust your withholdings before year end because let's say in 2020 you had a lower year and or you had a higher year and you thought this year would be lower,
sure,
you might say, well, shoot, I didn't pay enough in to be penalized. So let me just kind of give the audience a little bit of a refresher on why we have to pay taxes throughout the year. So if you're a W-2 employee, you're paying tax every week when you get paid, right? So you're paying as you earn. Well, with estimated taxes, you might have a business. You might have a Schedule C or S corporation or or a lot of investments that are generating income. It's not withholding taxes. So the IRS says you have to pay taxes as you earn. Well, instead of having to pay every week, they say you could pay quarterly. And they have what's called the safe harbor. So they say it's really hard throughout the year to determine how much tax you're going to owe because some things can spike in different quarters. So they say, okay, you can look at 2020 and say, I'm going to pay 100 or 110% of 2020, depending on where your adjusted gross income lies, and then you're safe from penalties. So if you let's say you were supposed to pay estimates and you didn't pay any, you're going to get penalized for underpayment of taxes throughout the year. By paying these estimates and using the safe harbor, I'm doing air quotes, Tammy.
Yeah.
You can cover yourself from estimated tax penalties. So if you had a huge sale and had a big income and your income is way up this year and you're going to owe a bunch April 15th, you won't be penalized because you paid the safe harbor.
Yep. And we always, when we give our tax planning summary out, we always give that line of here's where your estimates are, here's where you think you're going to be, and here's your safe harbor.
Absolutely.
Yeah, because that's a huge management tool, for our clients on cash management. Well, I have something else. Going back to the CARES Act, which we really don't say that word much anymore because now we've got ARPA and other things. But way back when with the CARES Act, an employer could choose to defer the Social Security portion that they would owe on their employees, payroll. And I think maybe everybody's kind of, forgot about that. Well, you know what? The IRS is starting to mail letters to businesses because the deferral payments are coming up. You have 50% due 12/31/21 and then 50% due 12/31/22. So believe it or not, reminder letters are going out from the IRS, which I think is pretty impressive considering how much the IRS has to focus on.
Yeah, and I've seen a couple of them, and they seem to be matching the numbers. Everything looks good. Yeah, it's just a matter of getting them paid. I mean, it basically was an interest-free loan.
It was.
For 2020.
And a few people took advantage of it. A lot of people didn't because they were really worried about cash flow.
Yeah, they were worried, well, what if I don't have the money next year?
And I might have to spend it and I'm not going to have it. So speaking of the IRS, because we always like to keep people updated. As of November 5th, the IRS still had 6.8 million 2020 individual returns that required manual processing.
Wow.
Now, that sounds like a lot, and it is a lot, but it is down from 19 million that we had reported before. Before. So
they're getting there.
6.8 million.
It's unheard of.
We are probably about 2 months-ish away from filing season opening for 2021.
I know. The IRS is just inundated right now. They keep trying to give them more funding. It is insane.
It is.
And they're just going to get more returns because everybody's filing gift tax returns because of potentials in the state changes. And then everybody's going to be amending returns because of the employee retention credit.
Exactly. So, which those are still coming.
Speaking of which, good segue, Tammy.
Okay.
So the new infrastructure bill was just passed and signed by the president. And in there's just the infrastructure bill is more about spending.
Right.
On our infrastructure.
Sure.
So, but there's a couple tax-related items in there. The employee retention credit was scheduled to end December 31st. It is now done as of 9/30.
Yep.
So only the first 3 quarters of 2021 are qualified.
Right.
Something else that I thought was interesting was cryptocurrency. It's now requiring businesses to file a Form 8300 to report cash of over $10,000 received from customers. So if I'm a business and someone comes in and pays me with cash of $10,000 or more, I have to report that to the government.
Right.
Now, if they pay with cryptocurrency, that's more than $10,000. They're considering that same as cash.
Right.
And the reason they're doing that is because they want to make sure people are paying tax on that cryptocurrency.
Right. And so those of you that are dabbling in cryptocurrency, as soon as you actually do buy something with it, that is a taxable event.
And brokers and exchanges will now have to report sales price and other information on digital currency. So, like if you're using Coinbase and you're buying Bitcoin through Coinbase, it sounds to me like they're going to have to start issuing 1099 showing the sales and
Absolutely.
Exchanges of these. So.
And it's all in the spirit of being able to trace that and making sure that the Internal Revenue Service isn't losing tax dollars on that.
So we'll keep you posted on what's going. They're trying to do the Build Back Better Act.
Yes.
What would that be? BBBA?
BBBA.
BBBA,
Yes.
yeah. So we'll see where that lands. I don't suspect anything will happen before the end of the year, but you never know. I don't suspect anything will be retroactive, but we'll keep you posted as things go with